Okay guys, moving on. So the next question was, assess 2 ways in which government may intervene in the marketing process for this particular market that you're studying, it should say. So I'm going to talk more generally than that. I'm going to talk about how governments can affect the whole production of beef, not just marketing. So governments change every few years, and this can dramatically affect production of a product depending on the specific agenda of the incumbent party. So that just means whoever's in charge. For example, a government may choose to spend more or less money in industry, and that can affect supply of beef. So how can they do that? Well, if a government decides to spend less money on beef biosecurity, so looking after any issues that may happen, this could increase the risk of disease outbreaks, which would result in a drop in the supply and demand of beef. I'm going to talk about supply and demand in more detail, so don't worry about that. They may increase protectionism. So this is something that we're actually seeing a lot of across the globe. So this is the practice of shielding a country's domestic industries from foreign competition by taxing imports. If the government can't establish/maintain international markets, this will result in a reduction of supply from producers. And then there's regulatory barriers. Naming beef as organic has to meet strict government guidelines, which are subject to change over time. If the government changes the classification, some producers may fall short, and this could therefore lower the supply of organic beef. So I'm going to talk about these in more detail, but protectionism is an interesting one because we're seeing a lot of that at the moment. So international markets, I just told you a few slides ago that the Australian beef export market was something like $7.4 billion. So that's a huge market, but can you imagine if the people who are buying Australian beef suddenly stopped or started putting big taxes on it? Then you guys could lose a ton of money that's going into your economy. So we're not just talking about the Australian government here, we're talking about foreign governments too. And then we have regulatory barriers. So if I wanted to call my beef organic, I'm going to have to meet very, very specific, quite strict guidelines that the government have put down. But if that government changes in 3 years' time, then they might change those specifications and make them even more strict, or they could relax it. But if they make it even more strict, I might not be able to adapt in time to meet those new guidelines, and therefore that's going to affect the amount of, or the beef that I can call organic, and therefore probably lose money. So governments are important in the beef production cycle for a number of factors. I talked about foreign governments. I'm going to talk about China. So international markets such as China, pork is by far the most popular meat type in China, followed by poultry, beef and mutton. So mutton's another form of, or a lamb basically. However, with increased urbanization and as the middle class incomes continue to rise, consumption preferences continue to broaden to include less traditional sources of protein such as beef. So if you go to China, pork is their sort of preferred protein of choice. But as they're getting a bigger middle class, so people have more disposable income, beef might be seen as a bit of a luxury, might be quite expensive. So if you have more money, then more people are more likely to maybe go for beef. That could be a really good thing for Australia if they want to export more beef to China, for example. So that could be another way another government affects the production here. One of the downsides of that, I guess, is what we're currently experiencing is this trade war. So I'll read this out, then I'll explain it. So the US-China trade war has been a great source of uncertainty for financial markets over the past year. That uncertainty has weighed on investor confidence around the world and has contributed to losses. In 2018, Hong Kong's Hang Seng Index fell more than 13%, and the Shanghai Composite slumped nearly 25%. Both indices have recovered some ground this year, are up 12% and 16% respectively so far in 2019. So what the hell am I talking about here? Well, if you look at the graph in the bottom right, we have the stock market, okay? And what's happening is the US and China are putting tariffs, so they're charging each other money on things that maybe is being imported from China to America, so they're charging the Chinese money and vice versa. And what's happening there is it's making people quite worried about the stock market. So say I'm a wealthy man who puts money into different companies, I invest in companies. These trade wars make it less financially beneficial for me to invest in some companies because I might not get a massive return. So I put, say, $1 million in, I might expect after a year to get $2 million back as an investment, but currently I might actually lose money. Okay, I might put $1 million in and get $900,000 back. And then when that happens, the stock market becomes volatile. And in 2008, we had the economic recession. And basically what happens is a lot of industries get affected by that. So we don't need to know this in too much detail, but it just gives us a bit of context about something that's relevant and is happening right now. I think if you put that down your HSC, the examiner would be pretty impressed that you understand what's happening in the world right now as well. So this moves us quite nicely into supply and demand. So I'll explain what both of these are. I'll start off with supply and then demand. Supply in economics, supply refers to the quantity of a product available in the market for sale at a specified price at a given point of time. Demand then, therefore, refers to consumers' desires to purchase that product and the services at given prices. So, in a nutshell, supply is related to the production of a product and demand is related to consumption. So, they are different things. They are obviously linked. But, for example, in the Central West, we're maybe not supplying as much beef because of the climatic conditions. So that's a supply issue. If suddenly everyone became a vegan tomorrow, that's a demand issue. Okay, I'm going to talk about these in more detail. We'll start off with factors that could affect the supply of beef. So the main factor that influences the supply of a product is the price. Generally, if the price of a product, like beef, increases, then the supply of a product also increases. So if you went into the shops and people were buying beef for $8 and then the next year they're buying it for $15, if I'm producing beef, I'm like, okay, I want to supply more because I'm going to make more money. If the price of beef drops, then supply will most likely drop too because of another factor, which is called the cost of production. So if it actually costs me more money to produce the beef than it does more money than I actually earn off of it, then there's no incentive for me to go and produce a ton of beef because I'm not getting much money for it. It could end up costing me money. So cost of production, well, I was just talking to there. A farmer or a producer of beef would supply less quantities of beef in the market when the cost of production exceeds the market price of the product. So that makes sense, okay? If it costs me more to produce that one cow than it does for me to sell, I'm not making any profit, then I'm going to not be very well inclined to produce lots of beef. A farmer of beef would supply more quantities of beef in the market when the cost of production is less than the market price. So if it's cheaper for me to produce a cow and I can make a lot of money when I sell it, then obviously I'm going to want to produce more cows because I'm making money. So that just makes sense, but we're just maybe framing it using the right sort of terminology. So that's cost of production. Natural conditions I've already kind of alluded to. Climatic conditions can directly affect the supply of products, particularly beef. The supply of beef will be high when weather conditions are stable, for example, good rainfall and high levels of green grass. The supply will be low when weather conditions are unstable or unpredictable, i.e. drought conditions, there's less feed, therefore less supply of beef. And that directly goes back into number 2 there, which was the cost of production. If I usually rely on the grass in my paddock to feed my cattle, suddenly there's no grass because we're in a drought. It's going to cost me more money to raise those beef cattle up to market spec because I'm now going to have to buy grain because there's no grass in the paddock. Okay, so they're all interlinked, but it's worthwhile understanding them separately as well. So for example, just in case you needed any more clarification, here's a paddock in normal, stable conditions, and here's one in drought conditions. I think it's the same paddock, which is pretty horrendous. You can just see the mound of the hill there and the mound of the hill there. Very, very different. Okay, not going to be a big supply of sheep in these sort of conditions. And the same here in this forest situation. So you had a bushfire and your paddock was totally destroyed and there was no grass, it was all burnt to a crisp, then your supply is going to be much lower, if at all. Okay, factors that could affect the supply of beef. Tech, we've talked about this already. New technology often increases the ease at which a product can be produced. For beef, this could include modern transportation, talked about this already, okay, the refrigerated lorries, high quality feed, atmospheric packaging, easy for me to say, AI, embryo transfer, genetic engineering, computerized selling systems. So I've already put that in there. But again, if you learn this about the beef study, depending what kind of question they ask you, you're going to be able to rely on the information that you've learned. Okay, so we're not asking you to learn loads and loads of different things, but you need to be pretty confident with all of the things that could affect the supply, and technology definitely is one of those. Related goods. So related goods are products that are linked to one another in some way, for example, beef and leather. So we obviously have, if you're fancy enough to have leather seats in your car, then you're obviously, if you have a high demand for leather, there might be then a knock-on effect for the beef that you produce. So if more beef is produced, then this should increase the supply of leather as leather is produced from beef. So related goods could help drive the supply of beef as well. If the price of beef remains high, often during challenging economic times, for example recessions, consumers may switch to cheaper proteins such as pork and poultry. The demand for beef would be less and therefore result in less supply. So related goods is also talking about different proteins. So it's important, if I'm a beef farmer, to understand what's happening in the pork market and the poultry market as well. Suddenly, if chicken is cheaper than beef, we know that. If it becomes way cheaper than beef, then people might switch to poultry. And again, that's going to affect the supply chain for beef. Government policies, I won't labour this too much, we've already discussed, but governments change every few years and this can affect the supply of beef as well. Like I've already said, they may choose to spend more or less money on the industry and that could affect the supply too. So it's a little bit more complicated than the way I've just said, but we don't need to think about it any more complicated than what we've just discussed. But if you want to have a look at the Australian Meat Processor Corporation, let's see if I can zoom in here. I can't, but basically these are all the things that can affect the supply of beef. Okay, so you may want to pause and have a look at that. I do not expect you to commit any of that to memory, not any of it, maybe some, but you'll see some of the things that we've talked about there. Okay, so maybe even looking at the bottom is quite good. So biosecurity things, communities, environmental risks, industry and market risks, political risks and technology risks, excuse me, can all affect the supply of beef. So you may want to have a look at that. It's a complicated web, and no one thing is going to solely affect the supply. Okay, it's this big web of competing agendas and interests that are going to affect you. So you kind of need to have your finger on the pulse to be able to read what's happening in your marketplace. Okay, let's pause it there and we'll move on to what can affect the demand.